Hey, Alan, how are you doing?
Hey, great, James. Good to see you again.
You as well, you as well. So, Alan, the market's been kind of in a tough spot lately, and I guess the best way to describe it is all of the new issuers that have been coming to market have been absolutely dismal performers. And I'm curious as to your perspective on why that is.
Yeah, so, I'm not able to confirm this precisely, but I've heard from enough people, kind of started with the Curaleaf deal, and apparently they had a big, they were out there representing that the book was even bigger than it was, and people upped their orders, and then they ended up getting full allocations on the upsized orders, and so it left a bad taste in people's mouth, apparently. I've heard that from a number of sources, and so the reality is we've seen in very weak overall market conditions a lot of supply raised. And I've been watching the capital raising in the cannabis sector for the last several years. And we go through these cycles. And at the beginning of 2016, the beginning of 2017, we saw a lot of capital raised in Canada, and it pressured the stocks ultimately. And I think we're seeing that. We're seeing a little bit of a jam job from some of these issuers, perhaps, and I blame that likely on Canaccord, the underwriter. But I think that's part of it, and I think we were talking about this last week with all the losses across the sector this year, and some early in the year gains, and maybe late in the year gains for certain names. It's just really easy for people to throw in the towel, take their tax write-off, clean up their books, and come back and play again next year. So I think we're kind of in that mode. I would point to the immense revenues that are being generated by a lot of these new issuers. Specifically, Trulieve isn't a real new issuer. They came public, I believe, in September, but they kind of lead the list among the MSOs, or multi-state operators in the United States. But some of these other guys like Curaleaf and Harvest and Cresco and Imhardine, they all have very substantial revenues relative to their Canadian counterparts. So in 2016, when people were piling into the Canadian LPs, these businesses were not that advanced. They were very speculative at the time. Hard to tell who was going to be the leaders. And ultimately, those that raised the capital have become the leaders. Aurora, Canopy, Aphria come to mind as really good capital raisers. And here in the United States, a couple years later, maybe almost 3 years later, it looks different. And investors are able to judge companies that actually have very substantial operations already, generating revenue with a pipeline. And something your readers may not and listeners may not appreciate. I've been following the Canadian LPs for more than 5 years, roughly 5 years, and they never have given guidance. Organigram just gave guidance. This is the first time I recall ever seeing guidance out of Canada. And they guided for Q1 revenues, that's the quarter that just ended November 30th, that would exceed the whole year last year, 12.6 million Canadian. In the United States, we're seeing these new companies give guidance. And I want to call out one in particular, and that's Harvest. Harvest is based in Arizona, and that's really where all the revenue comes from right now. And I think it was page 27, if I'm not mistaken, of a 46-page deck, 13 pages of which were risk factors and 3 pages of which were disclosures. But if you look at that slide, they laid out in detail how they're going to get to, I think it was 566 million revenue in 2020. So I don't know if these companies are all going to achieve their goals. I love that they're sharing them, and I love that some of them are actually giving substantial detail. And I just published an article for 420 Investor subscribers detailing, I think, 9 companies, including Organigram and Harvest that I just mentioned, but 7 others that have provided guidance. So that was a long answer, James, but I think that's what's going on with MSOs.
No, I like a long answer. What's the symbol on Harvest?
So in Canada, it's HARV, HARV, not to be confused with Harvest One, but HARV, HARV. And in the United States, it's not a real listing yet, but HTHHF.
Mm-hmm. Okay, so do you think that that the era of the massive private placement at an egregious valuation relative to what the balance sheet expresses is now becoming a thing of the past because there's a more cynical, sort of jaded American appetite coming to bear on this, where, you know, sure, you'll get speculative value built into a share price in the form of a premium, but not at those crazy multiples where it's just like, oh my gosh, things valued on a speculative basis at 10x go forward revenue. It's like, it still makes no sense. So do you think that's kind of like those days are gone?
I'm not sure. I have to be quite honest. So I don't always see these things early. I mean, it's the private placement investors that see them, and I'm not privy to that necessarily. And so on Curaleaf, for instance, trying to remember what the point I wanted to make on the deal. So I looked at the deal after it was priced. I was like, wow, this just seems like in the wrong ballpark. So for whatever reason, people were scrambling to get into Curaleaf and some of these other names in advance. To be fair, a lot of the weakness came with weakness in the overall market and specifically in the cannabis sector. So it's not like these deal prices were necessarily egregious. They ended up looking more egregious than they might have been, just because by the time the deal's priced and announced, you know, there's been 2 weeks to 4 weeks perhaps. So, you know, you're looking at it today when everything's already declined. So, but to your question about what's it mean for the future, I think we're just getting started, and it's unfortunate that some of these investors have taken some lumps. We saw Medman do something kind of odd in a bought deal, and they talked about courting new investors, that they wanted to make sure that these investors weren't hammered, and basically, so they let everybody get hammered, and you know, you saw the repricing of their bought deal, and that was their rationale. I didn't agree with it, but I at the same time, I respect where they're coming from. They put a lot of time apparently into developing these new investor relationships, just as many of these MSOs have done. And, you know, it's unfortunate. We can all point our fingers at Canaccord maybe. I don't know. I don't know the cause, but I do know this. You could have given up on, to bring back Organigram again, you could have given up on Organigram after they went public. They opened up at $2.40, and the next thing you knew, a year and 3 months later, they were trading at 20 cents, and it was a total storm of some sort. And you know, and I don't even remember now if they were able to raise more capital on the way down. But I would just remind everybody that, let me give a more recent example. At the end of 2016, at just a terrible time, in my opinion, to go public, Innovative Industrial Properties, that's IIPR, did something spectacular. This is a 100% cannabis-focused REIT, and they listed on the New York Stock Exchange at a bad time of the year, in it wasn't the worst market, but it was like after a little bit of a bull market run in the cannabis space related to the elections. And, you know, nobody does these IPOs on Thanksgiving Day or whatever they did. And the stock came out at 20. Next thing you know, it's trading at below 15 briefly. Spent all of 2017, or most of it, below $20. And it's above 50 now. So to all you who got slammed with MSO stocks at high prices, here's the good news. These companies are performing fundamentally, and they have a great chance of recovering. I'm spending a lot of my time trying to differentiate between these different companies. There's not really an effective way to buy them all at one time. I've talked about, in full disclosure, a client of mine, Organigram Holdings, and I've mentioned this one to you before. They may be an interesting way to play that whole theme of these large cannabis companies forming or extending in the United States, you know, swallowing up licenses left and right, because they work with all these companies, so they'll be able to ride that wave. And there may be some other companies like that too, but for now, investors are kind of stuck. And there will be some new issues, James. Maybe they're going to get hurt on their pricing because of the bad experience, but I don't see this as a serious setback for the industry.
Mm-hmm. All right, so I wonder to what extent, though, you know, I've noticed, as you have, that this cycle of raising big chunks of capital, like, so when the markets are hot, everybody tends to rush in and announce a big wave, and that puts an immediate overhang on the market 4 months down the road. And yep. So I've seen, as I'm sure you have, that these cycles emerge, and it's as you said, in the last couple of years, the year starts off strong. Everybody rushes out and raises money. Well, by the end of spring, all that paper is free trading, and so the market drifts into a discounted condition throughout the summer until everybody's gotten off the majority of their paper, and everybody comes back from summer, and the markets are sort of frothy again, and the prices go higher, and everybody piles in.
Yep.
And then the influences of tax loss selling happen, and this year tax loss selling combined with the fact that there's a lot of geopolitical and macroeconomic sort of fragility out there. So, I mean, I look at this market and I agree with you. I think it's early days, and that these long waves are actually ultimately just part of an ongoing cycle of, market capitalization on premium as new interest comes in, followed by market discounting mechanism on liquidation of those financings, and rinse and repeat. And it's like you could almost set a clock according to this stuff. Like, I mean, investment season starts in January, and then it's over by the end of May, and then it starts up again in September, October, and it's over by December to start again in January. And if you can actually, align yourself with that sort of macro level thinking, then you're going to do a lot better than guys who are chasing those waves.
Yeah, I always say don't chase the waves, but it's been interesting because we started this year, and I shared an observation with my members at 420 Investor that in each of the past 2 years, you could set a clock to it. You sell the LPs early in the year, and you buy them back in the summer, and it's worked out really well. But I warned that this year might be different because it was based on only 2 years, and there wasn't necessarily a calendar reason. I thought it was more of a coincidence. And so this year we started off very strong in January, and the prices just kept shot up. And I think that was because of California and all the 2 ETFs in the United States that a lot of Americans were buying, and they didn't realize they were buying Canadian LPs, silly as that sounds, but that's what happened. And so in any event, we got a little bit of a summer rally this year, but I think the idea of setting your clock to that calendar did not work this year at all. And we're seeing, a lot of the LPs are down 50, 60, 70% this year. Many people focus on only the largest ones. If you take the 4 largest Canadian LPs that are listed in Canada, which would include Canopy Growth, Aurora, Aphria, and CanTrust, only one of those is up. Only one, and that's Canopy Growth. So It has not been a good year. So I'd be careful about extrapolating exact months and timeframes. And I think this year is rather interesting. There was a big rush, as you pointed, to go public. So we saw a lot of these companies go public, and sure enough, it weighed on the market. And for those that don't understand what happens, it's pretty broad. People sell maybe Canadian LPs to buy into Harvest or into Cresco or something like that. And I think there's just a lot of factors. So when I look into next year, I'm not that concerned about the supply dynamic. These deals don't have lockups for the most part. These newer deals did not have lockups on the new issue. So they're free to sell from day one. So we don't have that overhang. And I would say, unlike Canada, which has under 40 million residents, the United States is a much bigger market. And I would just point to, while we always talk about the risks being greater in the United States because of federal illegality, at the margin, there's the opportunity to swing that federal illegality towards legality, which is really well received. So there's some upside potential from that. And then the valuations, as we often talk about, are so low, yet the revenues are so high relative to the Canadian LPs. So it's not so much that this is bad for the Canadian LPs, it's just that a lot of US citizens that are interested in cannabis, I think, are going to roll not necessarily into Canadian LPs, which is really their only choice in the past if they wanted to be in legitimate companies. Now they have a lot of options in the United States.
You bet. And I guess we're going to see more of that evolve and unfold as we go along. Alan, we're going to leave it there for now. Thank you very much for joining me today.
It was great, James. Thanks. Thank you, James.